Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning on April 28th. I want to thank Tyler for covering for me while I was on a little getaway with my kiddos here the last couple of weeks. In terms of the market, with the last couple of weeks, there were a few more yellow flags, but nothing really had changed. And from a 10,000 foot view, I still think that's the case. I still think we're kind of in this on again, off again situation. That said, this week there has been a worsening of the evidence, and we're seeing more potential leaders get hit. The broad market's weak, but we're seeing some resilience in the big cap indexes, so on and so forth. If you've already been cautious like we have, we wouldn't be doing anything major at this point, unless you own something that blew up or whatnot. But for the most part, Cabot Growth Investors model portfolio, we were about half in cash. Now we're a little over 60% of cash, and part of that was taking a couple of partial, small to mid-sized partial profits off the table here. But let's just see how it goes. I still see a lot of stocks that I'm going to go through that are set up well, acting well, and that many of them have earnings here in the next couple weeks. Obviously, if we come in the next couple of weeks and these things really implode, that's not good. But, and we have seen some of that this week. But if we do get the market, maybe early in the week was a little bit of a shakeout. If we get some of these stocks to pop out of there, I think we still would have something to work with. But right now, I would just say in general, we're talking about cautious but flexible. We're still cautious. We're holding plenty of cash, but we have a few lines in the water too. I wouldn't mind doing a little bit of buying. 60-something% cash seems a little bit high. But, for the most part, this is still kind of a meat grinder, on again, off again environment. So nothing too big on the buy side, and really just waiting for the institutions to tell us that they have confidence to really put money to work, and we'll see that in the market, okay? Let's hop into the charts, and excuse me, I got a little frog in my throat from allergies this time around. As usual, I'm using a program called MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. So when you look at the NASDAQ or the S&P 500, things look pretty good. You can call it a cup with handle or whatever, but honestly, a good day or two, boom, all of a sudden it looks like, we're hitting the highest level since last summer. Here's the S&P 500. Same sort of thing, right? You kind of come in here, we come in next week or the week after or whatever, boom, we're above this 4,200 level. I mean, this thing is it's really a few percent from almost like a 1 year high for the S&P 500, okay? The problem is a lot of it, I wouldn't say the problem, the thing to realize, and you don't need a chart degree to know this, is a lot of it is just really, really concentrated in the mega cap. Okay, so here's the S&P 500. Here's the S&P 500 unweighted. And you can just see it's a difference. Now, it doesn't mean, it's not terrible. It's not down here. It's just telling you that, the major indexes are being propped up by a few stocks. Here's the QQQ, which is obviously Apple, Google, Microsoft this week. Here's the QQQE, which is unweighted. Okay, you can just see the difference. Again, not a disaster, still an okay pattern, but just kind of playing more into the theme of like we're still kind of in this 3-month up and down, on again, off again, whatever your analogy, whatever you want to say, type of environment. Okay, and then of course when you dig deeper, you're seeing things like here's semiconductors that looked really good, and we're kind of leading the market in here, and they're not terrible, but they just kind of been drooping. Compare that with, here's the XLP. Me, I like to look at consumer staples, kind of smoke up a chimney here during the last month or 3 or 4 weeks anyway, right? Here's, small cap growth, IWO down here. This is down here, XLP's up here. So again, you don't need to be, working on Wall Street to understand what's going on. You have some very, mega cap things holding up the indexes, and the rest of the market is weak-ish to stagnant. I wouldn't say it's a disaster. It's just kind of not, there's not really even, I believe it was on Thursday, we had a huge ramp in the indexes. Growth stocks to me were basically flat, so it was really just depends where you're looking. And then just one more, I do look at KRE, which is your regional banks here. And I don't follow it too closely, like tick by tick. I would just say, if KRE or financial stocks in general, if they have another real leg down here, and so far they've held up pretty well. First Republic got destroyed. Looks like that's going to get taken over or whatever. So far it's trying to hang in there. But if we had another real leg down in this, I'd have a hard time seeing the market, hold up, very well. At the very least, there'd be some selling pressure, okay? And you're also seeing, again, not a disaster because it's bounced back, but this is like the Dow Transports. very sharp dip, trying to bounce back here. Ideally, this is sort of a shakeout. Ideally, you look at the NASDAQ. This is sort of the early week selling this week. The obvious thing to do would be to sell off here because we're in this trading range. But the market held the 50-day line and bounced. So ideally, that's a shakeout and we really break out here. But again, you kind of have to see it to believe it first. The other thing that we did see this week that was different is we are seeing more stocks. This is First Solar. It's been a leader. It is later stage. I mean, it's had a big run, but down 14% as I record this on earnings. Impinge, PI, listen, look great, acted well, good numbers, held up well, reported earnings. I don't know, down 30% or whatever it was, 35% or something. Even today, Cloudflare, not a leader, but I keep an eye on it. Former pandemic winner, that's getting nailed. And then even outside of earnings, there was an earnings report in the group, but this is Palo Alto Networks. Just kind of straight down here, not the end of the world. You look at the weekly chart, it's not like, this thing's toast and going to fall 30% after this run. But the point is that there still just seem to be these air pockets showing up, and eventually a stock can hold up, do pretty well, go up a little bit, but then eventually it hits this air pocket. So hence sort of the meat grinder environment, it's still kind of a less is more situation, okay? Now you're going to say, well, Mike, you just showed us, there's only a few stocks holding up, financial stocks don't look good, growth stocks are getting hit, you're seeing breakdowns. Why do you still think, if the market had a good couple of weeks and we saw, a lot of breakouts, why do you think we could be cooking with gas? And the answer is, number one, there's just a very pervasive pessimism out there. There's a lot of dry tinder. It's not panic. It's not pandemic. It's not financial crisis. But, just any sort of do you think the market will be higher in 6 months? It's like one of the lowest in decades. Do you think the economy's on a good track? Just generally the man on the street sort of questions, very, very, very low. People are they don't expect the market to go up, basically. So if the institutions can get confidence, maybe the Fed says something positive next week, hey, we're done raising rates for a while. Maybe they start putting money to work and looking over the horizon as opposed to just the next 3 or 4 weeks, sort of thing. The other reason is, even though we have seen some damage this week, most of the stocks I watch they've taken on some water, don't get me wrong, but they're hanging in there or trying to round out consolidations, okay? Excuse me. Okay, this is Arista Networks, ANET. Most of these names I've mentioned before. But again, you just have this big base, beautiful, breakout, acceleration, big volume here. And then the stock comes right down to its 10-week line. And you actually see volume this week, not to get too in the weeds, is actually high. It's still below average, but, it's going to be about average. But it's higher than the prior 3 weeks here of the stock kind of selling off. This company has earnings May 1st, so on Monday. So we'll see. Who knows? Maybe it dies, but all of a sudden this thing pops higher. Arista Networks, still intact, number one, and if it pops higher, could resume its uptrend. Duolingo, DUOL, really just sitting straight sideways here while the broad market's kind of weak, even though the stock has gone obviously way up here and has had this huge volume coming out party. Usually in this environment, all bets are off, but usually when you get this sort of initial base and just a massive breakout on volume, massive, usually it's not going to up and die in just a few weeks. So we'll see what happens. This one has earnings on May 9th, but so far so good on that. Double Verify, I've mentioned this before. A little bit of a hit this week, but overall you can just see it's just basically chilling out here, pulling back, very low volume. This one has earnings on May 10th. Again, you're looking at something that says, can it decisively break out? They tried to hit it a couple times. They have hit it a little bit this week, but nothing too damaging, still above the moving averages. Fresh Pet, I think I've mentioned this before. This one's actually toying with resistance. Kind of a turnaround play, but call it a double bottom or whatever, but huge volume support, I don't know, maybe 6 weeks ago. And May 8th earnings coming out. Notice the tightness here on the weekly chart the last few weeks here before this week. So again, it's a proper setup. Inspire Medical, I mentioned, this has started to come around. This rally, we thought it might be ready to go here, kind of reacted well to earnings. Market got in the way. Now it's kind of set up this new 20% deep, let's call it 10 weeks, I think it is, consolidation. Kind of this, again, part of this 2-year zone. Earnings here next Tuesday, May 2nd. Lululemon reported earnings and reacted well a few weeks ago. You can see no selling pressure, still acting fine. I mean, that's one's not a new leader. I'm just going to throw a lot of names at you. Planet Fitness, I keep an eye on it. It's kind of a nice cookie cutter story, franchise story. Nice and tight in here the last couple of weeks, trying to pop higher now. Ollie's Bargain Outlet, OLLI, reacted well to earnings here. Here we go. And then kind of came down and never really followed through on it. But now you're starting to get some of the follow through, a little bit of a volume cluster. Earnings are already out of the way. They got earnings here in early June or whatever. So that looks, more promising. Las Vegas Sands, earnings are out of the way. It's still kind of, I guess it's hitting new highs, but it's still kind of in this, I would say almost like the top end of this range here for the last 2 or 3 months. I guess it's up and above. You can say it's above, but you can just see it's acting very well, holding these gains, holding the earnings gains. That looks good. Chip stocks have been iffy. Some of the things that looked like leaders have broken, which makes me worry a little bit for the group. That said, when I do look at NVDA, which has been sort of the liquid leader in the group and maybe the whole market, very, 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 very tight in here, straight sideways the last few weeks. As the 10-week line is caught up, no volume here on the downside. ASML, we'll see. This was kind of an old leader, chip equipment or whatever. But again, just kind of a nice calm range. I don't know, 100 points, so maybe 14, 15%. It did report earnings here. I think this was a week ago. But just kind of hanging in there. Let's see if it can kind of accelerate higher. HubSpot, they have earnings May 3rd, so I guess that's next Wednesday. A little bit of wobbling this week. In fact, if you look at the daily chart, it's been, boom, boom. It's kind of been up, down, up, down. But when you look at the weekly chart, it's really percentage-wise very tight in here. It just looks proper. We'll see what happens. You get a nice follow-through on earnings. It looks pretty good. On holdings continues to look fine, choppy, but, holding this huge earnings breakout for the most part. Chipotle Mexican Grill was one of the few, real positive earnings surprises this week. Big breakout from, $2,000 stock, not for everybody, but big breakout from this, 2-year range, year and a half long range. And, early on, it's actually, I wouldn't say it's following through huge, but it's actually ticking higher here following earnings. Home builders still look good. You could pick one, but this is DR Horton, looks really good. And this is part of you can just kind of see on the weekly chart, this latest consolidation, very tight couple months, and then breaks out on earnings, pretty good volume last week. No guarantees. We'll see what happens with interest rates, but the whole group looks like it's moving. And there's kind of a couple random names that I found screening. This is GXO Logistics. Even though transports have been weak, some popped on earnings today, a couple. And this one's set up really nicely. This has earnings on May 9th, kind of this bottoming base tight in here. Not going to set the world on fire, but looks pretty good. And then in terms of an old name that some of you might remember, this is MongoDB, MDB. Had a huge run, pandemic, huge decline during the bear market. And it's been trying to work its way back, but you can kind of see it's still kind of hanging in here, choppy, but hanging in here, good volume. They tried to sell it off earlier this week, good volume support. So, and I could go through, even names that aren't like growth that I wouldn't really even sniff, but there are a lot of stocks hanging in there that have some pretty good sales earnings estimates and all that. So that's why I do say if the market, getting back to the market, if the market can broaden out and get going on the upside and institutions, right now they're nibbling, they're not really selling in droves, right? But they're kind of nibbling, they're not buying in a real accumulation campaign. If that can start, I do think there's a lot of merchandise. I've said this before, down here, when the market gets going, there's not a lot of stuff set up yet because we're coming off the lows and we just had a bear market. Now it's kind of, here we are 4 months into the year. Okay, we've had a rally, a lot of stuff did well. And to one degree or another, we've had a lot of stocks consolidate here during the last 2 or 3 months usually, while the market has. Now, some don't look so good, some are cracking, but a lot are still hanging in there. And there's a ton of earnings, at least on the growth side, the next 2 weeks. And I think that will really tell the tale. If we start to see a plethora of earning gaps up, I think we're going to have something to work with. But obviously, as I always say, we have to see it first to believe it. We haven't seen it in a long time, really many months, obviously, as the bear market's gone on. But if we do see it, you want to be flexible enough to capitalize on it. So we'll be watching. Okay, that's all the time I have for today. We do have a special offer if you're interested in subscribing to Cabot Growth Investor, so check out the closing slide. But thanks for watching, and I will be back again next week for another Cabot Weekly Review.